Welcome to the TBA Trading channel, and in today's video we are going to be looking at the only profitable price action pattern you need as a forex trader, part 1. So if you're doing it for the first time, we'd like you to hit that like button and subscribe. We'd also like you to hit that notification bell so you won't miss any of our content. So stay tuned, we'll be right back. So as I said before the intro, we're going to be talking about profitable price action patterns you're going to need as a forex trader if you want to boost your trading career in the long run. So what are these profitable price action patterns we're going to be talking about? They're actually basic price action patterns that you should already know, which the double bottoms, we have we have the this is funny. We have the double tops, which is just the opposite of double bottoms, which is something like this. We have the head and shoulders. We have the head and shoulders. Bear with me right first. And we have the inverted head and shoulders. Inverted head and shoulders. So it is basically just two different patterns, but because of the normal pattern and the inversion, you can just call it 4. So we're going to have this video is going to consist of 4 different parts, like part 1 through 4. And the part 1 is going to we're going to be talking about trading. We're going to be talking about trading the head and shoulders pattern as a continuation pattern. Like we're going to be talking about using the head and shoulders, using the double tops and the double bottoms as a continuation pattern to continue a certain trend and not as a reversal pattern. So in the part 2, we're going to be talking about using the double bottoms and double tops as a reversal pattern. And in the part 3, we're going to be talking about using the head and shoulders as a continuation, and the part 4 we're going to be talking about using the head and shoulders as a reversal pattern. Now I'm doing this like this just to reduce I don't want the video to get too long, so I don't want to talk about every single thing on the same video. So now let's jump into the screen. Now, what are head and shoulders? What are double bottoms and double tops? Double bottoms and double tops, they are a pattern that looks like this. Something that looks just like this. You can see the price gets into a particular zone that you should have like an OTZ, like an optimal trading zone. So once you have an OTZ, let me just darken this a little bit. Let me darken this a little bit. No, I don't like this color. Yeah, this is nice. So an optimal trading zone, when you have a support or resistance or a demand or supply zone, when the price gets into the zone and the price goes out of the zone and retests the zone again, that's what we call a double bottom. That is 2 bottoms in a zone, and the same thing for a double tops, 2 bottoms, 2 tops in a zone. Now this has significant impact into the market, like in the forex market, because it can actually push these patterns push the market far, and the reason is because of something we call edge mentality. When you're looking at the double bottoms, thousands or millions of other traders are also seeing the double bottoms, and you're actually buying and selling around the same side. So this increases the tendency for you to have a very profitable trade. Now, but some of you might look at something like, especially you guys that trade something like SMC, smart money contract, maybe like edge mentality is good and all, but edge mentality makes it easier for the banks to take out or liquidate us out of the market, something like that. But that's the reason why we're going to have conditions, we're going to have set rules to trade our double tops and double bottoms. So we're not going to be giving banks and market makers giveaway. We're not going to be using our account to do giveaway for market makers. Now, what are these rules we're going to look at? Now, rules for trading the double tops and the double bottoms. Now, if you've watched the trading channel hosted by Stephen Hart, which is my trading mentor, he always says something about CEST. The conditions, entry, stops, and targets. These are the four major things for you to create a strategy. So if you can create something like this and back it up with a strategy, and you've tested it over and over and over, like in the previous market, to see that it is profitable, then it's more than likely to be profitable in the future. And what I mean, you have to understand the conditions, the entry, the stops, and targets for that particular strategy. Now, we're going to be looking at double tops and double bottoms. We're going to be looking at a strategy to trade double tops and double bottoms to make it profitable over time. And these are the conditions, entry, stops, and target we're going to be following. Now, I'm not going to do examples on every single thing, but I'm going to try to explain every single condition, every single entry, every single stops, and every single target. Now, let's look at the conditions. AOV means area of value. Now, what's the first thing we're going to do? That we need the price to get into our area of value. In fact, that shouldn't be the first thing. The first thing that should be here is the trend. We need to see that the trend is in our direction, because now we're going to be talking, since we're talking about trading double tops and double bottoms to favor the trend, like to continue a trend. So the first thing we're going to be looking at is the trend. So the second thing we're going to be looking at is the area of value. Now, what is going on with our RSI when price gets to our area of value? We need to see a first top or a first bottom in order to classify the formation of a double tops and double bottoms and etc. So just think about, those are conditions. We need conditions to be made before you can say this is a double tops is forming, or this is a double tops. I hope you guys get what I'm trying to say. Now, the next thing we're going to, after you might have gotten an idea of what you think is a double tops. Maybe your double tops have completed, formed completely. You have to learn how to enter the trade. Now, believe me, a lot of you guys are going to have, the reason why I wrote only few conditions here is because a lot of you guys are going to have a lot of conditions. A lot of people are going to see different kind of double tops and call it different. Some people will call this a double top, some will call this a double top, some will call this a double top. So you have to have your set condition, like set rules to identify double tops too. That makes you identify double tops or your double bottoms. Hope you guys get what I'm saying. So now I am my entry. I call this Coco. Oh, somehow funny. It is called change of color. So that's one of my entries. I'm going to explain that very soon. Change of color. It is in my second top or my second bottom. One of my major entry reason is seeing a change of color candle. Now, retest. Some of you might wait for the retest of the set pattern of the air of the double tops or the double bottoms before you place your trade. It's your choice. Just make sure that you back test this as many times as you can to see whichever one works for you. Make sure a candlestick pattern like a doji, an armor, an amari pattern, whatever you want to use. Some of you might wait for price to get to an order block in a lower time frame. You might also wait for a retest of the moving average. Some of you might use Bollinger Bands, whatever you know you use, or whatever you know works for you. Try to use it. I hope you guys understand. So stops, there's a reason why I wrote multiple conditions, multiple entries, multiple stops, and multiple targets, because I want you guys to know that this strategy is not, it is not fixed to only specific conditions and specific entries and specific stops. Although this strategy I'm going to be showing you today is going to be fixed to the conditions that I'm going to tell you today. But the fact is that if you back test, you can actually get conditions, get more conditions, get more entries. As long as you back test them and they have shown to be profitable over time in the previous market, you are good to go. Now, our stops, where we want to set our stop loss, you can also use structure based on structure. You can use a Fibonacci retracement. You can use your moving average that is set it above or below the moving average, and you can use your ATR, one or two ATR below your entry candle, and you can use you can use what they call it, specific stop loss. This should be S, not T. Specific stop loss. Some people use stop loss of 30 pips, like specific pips for stop loss, like 30 pips. They don't place stop loss anything below 30 pips, all this kind of stuff. If that's what you like, you can also use that. Now our targets are going to be you can also use your structure, ATR, Fibonacci, and specific target, your choice. Just make sure you backtested it over time, and that's proven to be profitable over time frame. Now let's jump into the chart and see what we're talking about. Now, first of all, I said the first thing that should be here is should be trend. Sorry, the first thing that should be here should be trend. Trend. So one of the best ways to get the trend is to go to the higher time frame. I have to go to the daily time frame. The daily time frame. And okay, let me clean this here. So we're gonna daily time frame, as you can see, this is a downtrend. So we're gonna be looking for only sell trades. Now, there are two places you can get your. If I'll be looking for like long term swing buys or swing sells, I'll be taking my trading zones from the daily time frame. But since as you can see, I'm talking about an aggressive entry right here. So most aggressive entries are taking with the lower time frames. I mean like 10, 15, 5 minute time frames. So because of that, I'm going to be taking my trading zone from the 4 hours time frame. And if you can see clearly, there's already a break of structure right here. Price has broken this structure right here. And if I click on this, you see that price has also broken the structure right here. But where's our trading zone? The first we are going to have to do is to draw our support and resistance. And if you don't know how to draw support and resistance, you can check out our video on support and resistance. Now, once you have drawn this, don't forget we want to have an aggressive entry here. Okay, sorry, no, this is sorry, I made a mistake right here. We're expecting price to give us a double tops or a double bottoms. What should we be expecting the price to give us the double tops or double bottoms? We should be expecting the price to give us inside this zone. Not now, if I'll be drawing a daily support or resistance, that is when I can be drawing it to this angle right here, like to this low. But I'm expecting price to give me support or resistance. So what will I be expecting the price to go into to give me support or resistance after it just broke structure right here? That will be inside this zone. And since I've drawn mine, so I'm expecting price to go back into the zone, and let's see what. Let me just go down to the 1 hour time frame and wait for price to get into this zone, and let's see what happens. So you just aim to manage the clicks. I have to click it. Now, price has gotten into the zone. And don't forget we are still in a downtrend. And since we are still in a downtrend, what do we need now to confirm our sell? So we're going to be needing a double tops. That is, we are going to need price to get into this zone. As it has gotten into the zone, retrace a little bit, get back, then sell. That is clear. So now let's look at it now. Price has got into the zone. Boom. We add one candle to the downside, two candles to the downside. And now we need price to get back into the zone. Now, price is approaching the zone right now. Now let's look at the um, aggressive entries. I forgot to mention which of these entries are aggressive and which one are conservative. Now the change of color candle is kind of conservative to me. The candlestick is a little bit aggressive but still conservative. The other block now, it is a very aggressive entry, and that is the EMA is a conservative entry actually. So the other block is a very aggressive entry, and that is the entry we are going to be looking at right now. Now, as you can see, we want price to get into this. What's the other block here? And that should be this. As you can see. So we're going to set a limit order, blah blah, those kind of stuff. So if you don't really understand what other blocks are or how to trade other blocks, just let us know in the comment section. And I'm going to make a full tutorial on how to trade using the other blocks. Now, I'm expecting price to get into this other block. For since I have one rule. If I identify my other block in a time frame, I will most likely take the trade in the lower time frame. So since I identified the other block in a 1 hour time frame, I'll be jumping down to let's check out the 15-minute time frame to look for possible trades. Now, first of all, I have to adjust this other block. Let me put this to this eye and this. So yeah. So personally, I think this should be my order block actually, but because this was the candle that actually moved the market down, like actually moved price down. So my entry is going to be at the open or at the close of this candle. You understand? So my stop loss now. What am I going to use as our stop loss? Our stop loss. We said structure and something. Oh, this thing has cleared. Oh, it has cleared. So anyhow, let me just give you my rules. My stop loss. My stop loss for a very conservative entry, or for a very aggressive entry like this, my stop loss is usually 0.5 ATR, that is half of the ATR. But there are some scenarios where the ATR, the one ATR itself is okay. Now let me give you an example. Now let us place the trade, a limit order right here. Stop loss should be above this I, or let's say 1 ATR, above this I. And what is one ATR? I don't know why the ATR is supposed to give you some numbers here so you know the ATR, but it's not coming up right now. So you just have to do it manually. And the ATR of this candle is 10 pips. That's, if you look at the right hand side, you're going to see 0.00096. So that's approximately 10 pips. So let's look at 10 pips from this eye. 10 pips from this eye. Now this is actually too much. If it is too much, there are two things you can do. You can either use this other block. In fact, let me change this to 30 minutes. I think I'm going to use the 30 minutes other block. Let me shift this down to this. Now you can either shift this to 10, leave it as 10. Since I'm already increasing the other block, I'm thinking I'm going to leave it as 10. Then your take profit. Anytime you are taking you are trading head and sorry, double tops and double bottoms. Anytime you are taking double tops, okay, this is a double top. Anytime you are taking double tops and double bottoms, your first take profit should always be this line. And the reason is because there are sometimes that the market use double tops and double bottoms as potential traps to get retail traders like us. You understand? Just to liquidate us and get our to gather liquidity with our orders. So, but even to they try to gather liquidity with our orders. If you notice, if you back test and you check out how this market move, you find out that the double tops or double bottom still gets to the first structure after the neckline before doing something like this. So something like this is very, very possible in the forex market. Price can form a double tops and actually continue an uptrend. But the fact is that most time the price will end up getting to this area before continuing, or before the it continues the actual trend. So if you see something like that, you'll still be able to get a little profit, or before you get stopped out in your second, like, let's say you open like multiple trades, price will have taken out your first trade, which will have been something like a 1 2 3, and even to price hit your stop loss in the second trade, that's if you forget to break even, you're still going to be in profit. Now let's look at this carefully. This is going to be so our take profit zone is going to be here. I like to highlight zones out. So because I already know how this is going to play out, I'm still going to shift this a little bit higher to the head of the zone. Okay, so that's a 1 to 2 risk to reward ratio. And let's see how this plays out now. So let me remove these indicators. Let's see how this plays out. Boom, as you can see, we hit our target. Now what's going to be our second target? It's going to be our first take profit. Then you can go to a higher time frame and look left. Now 4 hours time frame, I'm not really seeing anything left, and I don't want to squeeze the screen too, so let me move to the daily time frame and look left. Now, if you're looking left right here, you're gonna see a structure right here. Now you can see that you can see these dotted lines here. So that the price is right here. So where do you think the price is going to? The price should definitely come to this zone right here. Price should be coming to this zone right here. Or is the price there already? Oh, sorry. Okay, let me just set an horizontal line here. So I will know where the price is and where the price is going to. So since the price is there already, price should be coming to this zone right here. So you have to understand support and resistance. If you don't really understand support and resistance, you can check out our video on support and resistance. So we know that the price is going into this zone. So we jump back to our 30 minutes time frame and we draw or extend our targets to our second. So let me check this careful. Let me check this very well. This is still still too close to the price. Yeah. Now, some of you might look at what I'm doing and say that am I not just moving the lines up and down and everything? Now you can move your area of value, you can move your support and resistance line, you can modify it as long as you want, you can modify it how many times as you want. But just make sure that the more you modify those levels or those your very important levels, make sure that they still satisfy what you want them to have. Like now, the reason why I moved the this line from here to here is because here when the zone was here, it is too close to the price. This is where the price is, and it is just too close to the price. And I want to make money from the market, so I have to shift this zone to somewhere else that has been tested multiple times, as you can see, tested multiple times, that has acted as support and resistance, that has acted as support and acted as resistance in the previous market multiple times, and it is still far from my price, so that I'm actually a swing trader, so I prefer to look for trades that actually go a long way. And that's another trades that you just place and you eat your take profit instantly and those kind of stuff. So with this now I can increase my targets to around here. As you can see, this is a 1 to 8 risk to reward ratio. And if you want to, your everything depends on your area of value you're trading. So now let's see how this plays out. Now let's jump to 30 minutes time frame. Sorry, 30 minutes time frame. Then on our second target, we actually got okay. As you can see, we got stopped out right here. Now, the moment we got stopped out, if you look at something carefully, you find out that the only reason why we got stopped out was because the market started to consolidate. Now, if it were a normal consolidation that happened at the midst of nowhere, I would actually have left this trade alone. But I think I'll still be looking for possible entries, because if you look at this trade carefully and you check out what happened in the previous market, you find out something like just look at this area here. You find out that after price broke structure, it consolidated a little bit before let's go to the past. Look at it. After price broke structure, let's say price broke structure right here. Price consolidated. When price broke structure, or you can some of you can call this your break of structure, whatever. It was consolidate. It was this consolidation. Then when price broke structure again, there was this consolidation again. Then when price broke structure again, like price after this consolidation, price broke structure again. Then you see something like there was this consolidation throughout, then boom, price break structure again. I think this should be the structure from here. It should be the lowest low. So down, price has broken structure once again. And after price break structure this time, price is consolidating. That is, there is a like 60% more chance of price breaking this consolidation to the downside. And since I know that price is going to break this consolidation to the downside, it means I should be looking for entries around this, around the upper side of the consolidation. That's the reason why we say you buy at discount and you sell at premium. That is, now like for a matter of fact, let me just bring out my Fibonacci. Now that price is in a downtrend, that is, sorry. That price is in a downtrend. Price is in a downtrend and it's going to continue the downtrend. Oh, this is disgusting. That price is in a downtrend and it's going to continue this downtrend after it breaks this consolidation. Where do you think is going to be the best place to enter the market? Here or here? Now, we both know that I think we all know that the best place to enter this consolidation will be right here. So one of the advantages of selling right here is that even to, let's say I've sold right here and I didn't take my profit here, and the market comes back to this area, I think I'll still be able to continue to the downside because with my stop loss, if you have a standard stop loss, still being saved and the likes and the likes and the likes. So let's come back to what we're talking about here. Since I already know that this is going to break to the downside, and how did I know? You have seen how the previous market reacted to consolidation after break of structure. So it means that there's a more percent, like there's like more of like a 60% like chance of this breaking to the lower side after this consolidation is complete. So what I'm going to do, we're going to do what we have been doing since the beginning of this video. We're going to be looking for a double tops inside this zone. So now let's wait for price to get into this zone again. So we're gonna wait for price to get into the zone now. Since price has gotten into the zone, I think I'll be waiting. Since I'm waiting for price to come down. Now that price has gotten down, we're going to be waiting for the, what are they calling it? We're going to be waiting for the second top. And don't forget, we're talking about the aggressive entry. So we're talking about the aggressive entry. I said something earlier that if I'm seeing my order block from this time frame, I'm going to go to the lower time frame to get my entry. And my order block is right here. And I'm taking my order block from this time frame right here. And since that's my order block, I'll be going to a lower time frame. And this is 30-minute time frame. I'll be going to a 15-minute time frame for possible entry. Now, let me just move this to this. And this is the order block. So I think I'll be looking for my entries from here. And as you can see, our entry has been triggered already. Our entry has been triggered. I'm not a smart money trader. If not, I like to put my stop loss about here or around here. I don't do that. I actually prefer to use the ATR indicator to dictate my stop loss. And what is the ATR? To get the stop loss, something like from here, the highest high, the ATR is 5 pips, just 5 pips. Let me now see what 5 pips is going to look like. If 5 pips looks too much, I'm going to reduce it to 2.5 pips. But if 5 pips is just okay, 5 pips is okay. I can manage that. Sorry. I can manage that. 5 pips. That's 5.5 pips. I can actually manage this. So And our next take profit. Don't forget that our first take profit is supposed to be this is our neckline. This is our neckline. So if this is our neckline, our first take profit is going to be this zone right here on this area. That's the first structure after the neckline. So we're still gonna bank something like 1 to 2 risk to reward ratio. Let's see how things are going to go. Then as you can see, price got really close to our stop loss, but because it was wide enough, we're still able to get. So let's see our first take profit. A smash. Let me go to a higher time frame now. Now, what's going to be our second take profit? Our initial take profit that we planned to take earlier, and that was down here. And this is a 1 to 12 risk to reward ratio. That's nice. Now let's see how things play out. And after a while, we're able to hit a 1 to 12 risk to reward ratio. I know this might look impossible. Maybe most of you might look at it as like actually cherry picked this, but as a matter of fact, if you look at this, it is something that you can still make. These are the kind of trades that we take not every day, but these are the kind of trades that we actually take most of the times because we have set rules, like set on stone rules that we have to follow. I didn't like try to change or try to bend any of my rules during this video. I was following each of the rules. The first thing I did was to get the trend. I think I would have to rewrite this. The first thing I did was to get the trend, and after getting the trend, the next thing is to look for an area of value. After getting an area of value, the next thing I did was go to my first stop. After I got my first stop, then my entry, look for an entry, and my entry I used a very aggressive entry which was the other block. Then after getting my other block, then my stop loss is what I used an 80 arrow for my stop loss. So let's look at an example of a double bottoms. A double bottoms. Now let's look at this is the GPPNZD. The GPPNZD. Now, first of all, what's the trend? This look like it's a downtrend, but there are two ways you can know that it's an uptrend. You can either go to the daily time frame and you see that okay, it has not even shown in the daily time frame yet. In the daily time frame, this is still strictly a downtrend. We're able to look at something in the 4 hours time frame. There is a break of structure, and where is the break of structure? You find out that this has been going like this has been coming down. Then there was something like this. Price is lower low, lower high, lower low. Then we had a higher high. So price broke the structure right here, higher low, and a price broke the structure again, which complete a 1 to 3 trend reversal move. So it shows that the price is changing. So this is all from here. We call this a change of character. Now, as you can see, now since we have confirmed the trend that this is an uptrend, what's the next thing we are going to do? The next thing we are going to do is to get our area of value. Now let's see how that is going to look now. Now, if you look at it very well, find that this is an area of value. Now you can draw multiple area of values, you can draw multiple support and multiple resistance. Now it's your choice. I already know how this market is going to play out. If I were to draw this, actually, let's say I wanted to trade this live, I would have drawn something like this, and I would have drawn something like this. This is what you're going to see on my chart. Now, but because I already know how this market is going to play out, that's the reason why I'm drawing only one. So you can draw as many support and resistance as you wish, but personally, I won't really advise you to draw too much support and resistance on your chart because it's just going to make your chart look clumsy, and you might not see some major things you're supposed to see in the market. But just draw as many as you can. that at least so just draw as many as you can and make you understand. In fact, as a trader, if you don't drop too much support and resistance before, you won't be able to see some other stuff. When I started trading forex, I used to fill up my charts with support and resistance, and because of that, even when I stopped filling up my charts with support and resistance, I was still able to see all those other stuffs that I couldn't see before. So now let's continue with this. So we're expecting price to come into this zone, and let's see what happens. Price is into the zone. Now we are going down to the 1 hour time frame. Now, okay, now this is wonderful. I've already seen a double bottoms right here. This is a double bottoms. Now, I didn't mention any rule about how many candles you have to see in double bottoms, but let me just give you one. One of the major things I like to see in double bottoms is that I like to see like movements. Like I need like minimum of two candles, like two red candles coming down, two green candles going up, then two red candles, then I need an entry reason. Now, let me even remove this because this is already my entry reason. Now, the previous chart we talked about was aggressive entry. We're going to be looking at a conservative entry in the double bottoms. But some of you might now ask that I said I need two candles, two red candles, two green candles, two red candles, and but if you look at this green candle right here, it is not just like any all these candles. It's actually it's like a momentum candle, and it's engulfed this red candle. It shows the reason why I need two candles in the first place is to see the is to see like I want to see if the buyers are in the market. I want to see how strong the buyers are in the market. I want to see if the buyers are able to move the market. Like just like a confirmation, just to see if there are buyers in the market. You get that kind of stuff. So since I'm having in fact, if you look at the candle very well, you see that it had almost no wick. This shows that there are buyers in the market and there are very active buyers in the market ready to push this market to the upside. So now we have our red candles, and all we need now is just a confirmation. And I said, as for confirmation, we need a change of color candle, as you can call it cocoa, any one of your choice. Boom. A change of color candle, sorry. Now, once I've gotten this, my stop loss, I'm going to place my trade right here. And my stop loss is going to be 180 hour below this green candle right here. And 180 hour for my conservative, I don't do 0.5, it is always 180 hour below the entry candle. And this is 29 pips. That will be approximately 30 pips. So I'm going to place it 30 pips below this guy right here. 30 pips. Oh, that's too much. 30. I think it's kind of already there. Let me just shift this down a little bit. And that's 30 pips. Now, my first take profit, as I've said earlier, I said the first take profit you're going to have is going to be the first structure immediately after the neckline. This is the neckline of double bottoms. So my first take profit is supposed to be here. Because the funniest thing just happened just right now. My system died yesterday, so I wasn't able to finish this video yesterday. And I just spent the next 10 minutes recording a video with no video. Like it was only audio that was recording. I thought that was very funny. Um, so let's continue from where we stopped yesterday. Yesterday we said that we're expecting the price to get like I said something about double tops and double bottoms entry. That my first target is going to be the first structure or the first area, the first structure after the neckline. And since this is the neckline, this should be the first structure after this neckline. This should be the first area I should be looking at as possible target for target one. But I won't be looking at this place as my first target. I won't be looking at this eye here as my first target, and there's a reason for that. And the reason is because before the eye here, there's a consolidation. Now, this consolidation, it means that there are equal highs and equal lows above and below the consolidation. It means that we have equal highs, and we also have equal lows above and below the consolidation. And anytime we have equal highs and equal lows, there is a tendency that there are liquidity above there's liquidity above and below that area. And if there are liquidity above and below that area, it means that the banks are going to try to get those liquidity. You understand? So if this is going to continue, as you know, this is already a break of structure though, because that was the reason why we took the um double bottoms, and that's the reason why we are going to be taking the double bottoms in the first place. But market is very unpredictable. You can't tell me that you can predict the market 100%. The double bottoms might do something like this, clear these eyes, after clearing these eyes, then come back to clear these lows. Well, and we might have something like this, and it's going to continue like this. Or it could even continue to this very low right here before it continues as an uptrend. So the forex market is very unpredictable. So because the forex market is unpredictable, you have to give room to always get out when you best can. You understand? So the best place I think should be to put my first take profit should be just above these highs, just above these highs, not all the way here. It should be just above all these highs. If your take profit is just above, let me just put it somewhere around here. That's a 1 to 5 risk to reward ratio. That's nice. So just look at it very well. If market is going to clear liquidity and do all those kind of stuff, price will just clear liquidity and eat your. When you say clear liquidity, it doesn't just get to these highs. It gets to the highs, clear the highs. Price is going to clear those highs and eat your take profit, then move to the downside. Now, how am I so sure? Let me forget about liquidity. If you look at this, you're going to see another block. This is another block. This green candle here is another block. So if you don't know anything about other blocks, just let us know in the comment section below. We're going to do a video talking about other blocks and how to trade using other blocks. We're also going to drop a profitable strategy trading using the other block. So this is another block, which means that we should be expecting price to get to this area before moving to it. In fact, if not because these equal eyes got to this level right here, this will have been my entry. This will have been my first take profit. But because I can see that the price is still going to get, even though it's going to continue lower. If we are going to refine this other block and we get to the 15-minute time frame, 5 minute time frame, there's a possibility that our entry is going to be somewhere around here. Because if you look at this carefully, you see that the equal eye still extends to this level right here. So I'm just going to put my entry just few pips above the equal eyes. So price is just going to manipulate everything into my first take profit. So even to price, maybe I wasn't online throughout the day, and price even hits the stop loss of my second entry, I still have a 0.5% profit because I'm going to lose 1%. Let's say I'm going to lose 1% of my account when price hits my stop, but I've already taken 1.5%. So I still didn't end up losing money. I'm still going to have a 0.5% profit. And if you're the kind of person that is very active online, then when price got to around the side and you close your profit, like you break even, you're actually going to end up losing nothing. You understand? So it's better than putting your take profit, your first take profit somewhere that the price might not be able to reach. Now, yes, I know I had the condition already, and I said um my first take profit is going to be in the first structure after the neckline. But you have to understand the structure in which the market is. Like you have to understand the structure of the market at that particular time. You understand? There are some times that your very objective rules have to bend a little bit just to satisfy the market at that moment. You understand? Just like what we said about this green candle. I said personally I'll be looking for two green candles, but as you can see, this candle is a very strong moving candle with actually showing like strong bullish period and also engulfed this red candle right here. So these are some kind of rules that you can bend a little bit. Not it's not you can't really call it bending, but very soon after a while, with due to experience and all, you're actually going to understand what I'm talking about. So, since if that's the case, after we've done that, let's see how the price goes. Boom. So our first take profit was smashed, and since price took our first take profit, so our second take profit is going to be with structure. Okay, let's jump to the 4 hour time frame. 4 hour time frame. So where do you think our second take profit is going to be? Now, this one depends on you. So your take profit could be first take profit is going to be here. Sorry, second take profit is going to be here. Then my third take profit is going to be here. Now why am I so sure that the price is going to get here? Actually, I'm not sure. I'm not 100% sure that the price is going to get here. That's the reason why my second take profit is here. If I was 100% sure that the price is going to get here, I would have entered with like risk something like 5% of my account in this particular trade and just I wouldn't even take my first take profit, just risk like 5% or 10% of my account in particular trade, this particular trade, and hold it to this level. But because of the fact that I'm not 100% sure that my price is going to get to this area over here, that's the reason why you can see me scaling take profit. So even though I missed this one right here, I won't miss this one right here. You get that kind of stuff. So that's what we are. So I hope you guys understand what I'm trying to do right here. So now, what made me? Why did I bring my take profit to this place? Structure. So if you like to use Fibonacci, you can just bring out your Fibonacci low to the eye, and you're going to get a take profit somewhere around here. If it works for you, there's no problem. If you want to use specific take profits, like maybe you want to use you only take about maybe 280 RO take profits. It's okay as long as it works for you and that's proven to be profitable for you over time. Some people might even use specific reward to risk ratio. Some of you might say you only take 1 to 5 reward to risk reward ratio. You only take 1 to 1.5. You only take 1 to 10. It's your choice. As long as that's proven to be profitable for you over time. So now let's see how this goes. Boom, our second take profit has been smashed. Let's wait for price to get our last take profit. Yeah, nice. Now you see what price did there. Price was few pips away from getting to our take profit, and it came before he came back to smash this. This happens a lot of times. The market is going to try to do its best. Market is going to try to do its best to toy with your emotions. So that's all for today's video. If you enjoyed today's video, if you learned something from today's video, we really appreciate it if you can like and subscribe. So in the next video, we're going to be talking about how to use the double bottoms and how to use the double bottoms and double tops as a trend reversal pattern as a reversal pattern. Here we use double bottoms as a continuation pattern. I don't know. I think I did something like I pointed out and I drew. Okay, this is even a change of character, which proves that this is now an uptrend. So I think I drew some kind of higher highs, higher lows on this yesterday. So this is an uptrend. That was the reason why we use the double bottoms to continue the trend. So in this video, we talk about using these patterns as a trend continuation pattern. So tomorrow we're going to be talking about, or when next I upload a video, the next video I'm going to be uploading is going to be about using these patterns as a reversal pattern. That is, using these patterns as a reversal patterns. How do you know? How are you going to know that these double bottoms you are seeing right now is going to push and is going to make this market reverse? You understand? You know, as a forex trader, you can't actually predict the reversal of a particular currency pair, except maybe if you are looking at some very high from some very powerful fundamentals. In fact, even with powerful fundamentals, even if you look at the pressure you see, let's say you see selling pressure is reducing in the market, all those kind of stuff. It doesn't really mean you can actually predict that this pattern itself is going to be the reversal. It's going to cause a reversal to this currency pair. Anything can happen. So since anything can happen, you can't really predict that. But the fact is that we are going to try in the next video, we're going to show you how you can at least to a 60% probability predict the fact that when you see these double bottoms, you know it is going to be a reversal even from a downtrend to an uptrend. Because you have sometimes that some things like this happen. How are you going to avoid something like this? And it's just a matter of set and stone rules you have to see before you place your trade, get all that kind of stuff. So how are you going to? In fact, I think I saw something like this just now. Yes. I don't know if you guys can see what I'm saying right now, but let me show you. Yeah, coming. You're gonna see it very soon. Yeah, I want you guys to look at this place. Well, if you look into the box, you see something. We'll go to the 2 hours time frame. Now, I don't know if you guys can see it. Now, I've been talking about using the double bottoms. This is a double bottoms. Yes, although it doesn't have. This is not the double bottoms according to my own trading rules, but some people might call this a double bottoms. And why is this not a double bottoms according to my own trading rule? Because price broke below this low, the low of the first bottom. Price broke below the low of the first bottom. Now, if I see something like this, I am not going to trade this as a double bottoms. So let's just imagine price didn't break below the low of this. You can see that price did something and came down. Well, when did price get to before it came down? It went to the first high, the last structure before. If you look at it, this is the last structure, or this is the last structure. So this is the highest week, and there's nothing here, and there's nothing coming in. So this is actually the last structure. This is should be as this can be acceptable as the last structure before immediately after the neckline. This is the neckline. This can be accepted as the last structure immediately after the neckline. And as soon as price goes to that place, it broke the it broke and came to and continue. So a lot of people are going to buy here, come to around this side and keep holding the trade, thinking that they're going to make more money. But if you are taking, let's say you actually bought here and you took your first, let's say you actually took this as your entry reason, then maybe your stop loss somewhere around here, then this was your first take profit. You'd have actually end up making something like a 1 to 2 ratio. This 1 to 1.99. So you'd have actually end up making about a 1 to 2 risk reward ratio, even before price stopping you out in your second target. So these are one of the reasons why you need set and stone rules. You understand, to take care of your trading. So the next video we're going to be talking about how to use head and shoulders, the double tops and the double bottoms pattern as a reversal pattern. Like the video and subscribe if you like it. Peace out.